deep pain in the markets. Okay. This is where people potentially are getting a little bit fearful if they're in the wrong names, potentially in the wrong options, potentially in the wrong amount of margin. It can also be a time where people end up looking to, start getting into margin. Be careful with that as well. Okay. I know that things comparatively to about a month or so ago seem extremely cheap, but if this is a broader based sort of sell off in tech, things can definitely get worse. Now, I do want to bring up, however, that the SPY, let's just bring up the SPY, down roughly 1%, QQQs down roughly 2.3%, showing that this is more tech focused in terms of its sell off rather than the broader market. And in fact, if we actually bring up the SPY at $682, and then we end up actually backing out over the last, 3 months, 1 year, 5 years. Let's go back to the last month chart though. The high was 697. Sorry, 697. Geez, I can't read. We ended actually breaking the 7,000 mark on the S&P, which Trump celebrated, but that was essentially the exact top. And then after that, we continued to fall, but this is not really that much of a sell-off, roughly 2% from its overall highs. Okay. The reason is that if we end up going and looking at a heat map of what the heck is going on, this is extremely tech focused. Okay. Semiconductors down 5.2%. Semiconductor equipment, 6.8% sell-off. Aerospace and defense down 3.5%. Capital markets down 3.5%. Biotechnologies down 1.8%. It's Cathie Wood's nightmare. Okay. Everything that has to do with computers and technology are down, roughly 8+%. Let me drop the chat off screen. But it's not all red. This is not a sea of red. There's actually a lot of things doing very well. Whenever you take a look at, what's the impact of overall artificial intelligence, are people worried about the beverage industry or the restaurant industry or the insurance industry, for example? Right? These things are not dropping all at the exact same time. There is some rotation away from tech into things like regional banks and things that people maybe feel like are not as in the target of artificial intelligence. Okay. So we will, I personally am going to continue to buy software. Okay. As a quote that I ended up making up yesterday on my own, no one else gave me any advice on this quote. This is essentially, search is dead 2.0, like what happened with Google. I think that that's exactly what we're going to see here. And you guys can go ahead and quote me on that. That was my quote. You don't have to go back to yesterday's stream to double check that. Let's go ahead and listen to Jensen Huang talk about how he feels about sort of broader software sell-off.
Give us your top of mind on physical AI.
Remember what software is. Software is a tool. There's this notion that the software industry is in decline and will be replaced by AI. You could tell because there's a whole bunch of software companies whose stock prices are under a lot of pressure because somehow AI is going to replace them. It is the most illogical thing in the world, and time will prove itself. Let's give ourselves the ultimate thought experiment. Suppose we are the ultimate AI, artificial general robotics, the ultimate AI, the physical version of us. Mm-hmm. You could, of course, solve any problem because you're humanoid. You could do things. If you were a human or robot, would you use a screwdriver or invent a new screwdriver? I would just use one. Would you use a hammer or invent a new hammer? Would you use a chainsaw or invent a new chainsaw? Just don't. First of all, ideally they don't use it at all. But do you understand what I'm saying? If you were a human or robot, artificial general robotics, would you use tools or reinvent tools? The answer, obviously, is to use tools. And so Now do the digital version of that. If you were a artificial general intelligence, would you use the tools like ServiceNow and SAP and Cadence and Synopsys, or would you reinvent a calculator? Of course, you would just use a calculator. That's the reason why the latest breakthroughs in AI is what? Tool use. Because the tools are designed to be explicit. There are many problems in our world where F equals MA. Please, could you please not come up with another version? FA is not kind of MA, it's just MA. Do you guys, Ohm's law, V equals IR, it's not kind of IR. You know, approximately IR, statistically IR, it is IR. Okay, do you understand what I'm saying? And so I think we want the artificial general robotics, artificial general intelligence to use tools.
That being said, you go through the history of Jensen Huang's career and you find the predictions that he's made that have come wrong. I mean, he is the oracle of the software and artificial intelligence business. I'm going to believe him when he says this. Now, one of the other names, now NVIDIA is not like super down today comparatively to, you know, a lot of these software names that are down like 10, 15% in some names. You got like Figma out there and ServiceNow and AppLovin and all of these companies that are just getting demolished. Okay. NVIDIA is still above 170. At one point today, it hit 172. It is down 4%. It was brutal being the largest company in the world, but their competitor, AMD, is down 16.5% today, back down to $200 a share. Absolutely brutal. Okay, and this is getting, you know, some worries from the market that maybe NVIDIA is going to end up posting earnings that they don't like. But even then, like, I didn't even think the earnings from AMD were bad. Like, I loved what they ended up showing off. But this is the fears in the market. There's just general concerns across the board. The goal is here is that, you know, you try not to panic. I'm aware that people are down. If you have cash, you're very happy. Potentially you're looking to buy dips. I don't know if you're ready to buy those dips or not. Maybe some people are holding out, but let's go ahead and have a listen. It's a little bit of a longer video, but it's Lisa Su talking about how AI's, you know, pace of adoption is looking to continue to accelerate, and that they are obviously, you know, being down 16, nearly 17% right now, going to recover. Go ahead and have a listen.
It's the reason why is the stock's up very big in the last few weeks, but it's coming off today. And the company beat the estimates. They boosted by exactly what Dave was talking about, which is the booming data center business, but also, and I think we're really going to miss the point, and the analysts missed the point badly, by the CPU business, which is the business that competes against Intel. We got to learn about both of them because the CPU business was completely left out by the analysts. It was kind of pathetic. And that's why I'm glad to have AMD Chair and CEO Lisa Su on the show. Lisa, I'm going to offer you a congratulations because not only are you well ahead of where you told me you would be with GPUs at this time 2 years ago, but you're also killing it when it comes to CPUs. And I think we got to talk on both. Where are you making the most money now? And where will you make the most money next year at this time?
Well, first of all, Jim, great to be on the show with you guys. Thank you. Look, 2025 was a fantastic year for AMD. We really closed it off strong. And what we see is strength across the entire business, which is really exciting. I mean, you know, obviously, there's a lot of excitement about, you know, data center and AI and what we're doing around GPUs. And that business has performed extremely well. And we're going into a big inflection year here in 2026. But as you were saying, like, the CPU business is absolutely on fire. And this is one of those stories where, you know, I've always said, Jim, that you need all kinds of compute when you think about data center and the massive buildouts that we're seeing. And we're seeing just continued strength in the CPU business, which is, you know, really our stronghold right now. So we're very excited about, you know, what we've done, but much more excited about what we have going forward in 2026.
All right, well, let's take off the table the idea that your guidance disappointed. Your guidance was actually pretty consistent with what you've been saying. second half. I don't know why anyone would think it was going to be second quarter. Am I missing something? Did you tell people that it was going to be second quarter and it turns out to be second half and they're disappointed? Where is the disappointment come in?
Well, let me say something, Jim. When we think about how the compute market is evolving, let me just give you a picture of where the trends are right now in AI. I know there's a lot of conversation, every morning on the show, you guys are talking about where is the AI trade. What I would tell you from someone on the inside is AI is accelerating at a pace that I would not have imagined. So you see, AI demand from the hyperscalers, you see AI demand from enterprises, and what is the foundation of all of that is compute. And so what is really important for us is to ensure that, we have the full range of compute. Now, as we go into the first quarter is usually seasonally down for us because we do have some consumer exposure. And I think the most important thing is we're actually seeing our data center business actually increase from Q4 into Q1, which is a show of the strength of the business, both on the CPU side, which is going like gangbusters, and with our AI capabilities and GPUs. We're seeing very nice ramp into the first half of the year, but yes, we're going to have an inflection point as we go into the second half of the year with our new, MI450 series and our Helios rack systems.
But let's talk about that, Lisa, because one of the things that I think is important that people don't understand is that, yes, it's absolutely true. The Vera Rubin certainly has some qualities. This is the next generation to be unveiled at GTC, not that far from now. Vera Rubin's got carried.
Go ahead and pull up the first stock that I think could have a stock split, and that's going to be Western Digital Corp. All right, so here we are on WDC. As you guys can see, over the last year, they're up 408% over the last year on Western Digital. You guys might know them as having the hard drives. And how does this go inside the AI play? Well, it does, because AI driven storage demand has increased. Hyperscalers like cloud and AI data centers, they're going to need storage. They're going to need massive, I'm talking about massive amount of storages, especially high capacity hard drives. And Western Digital has been doing hard drives and SSDs for the longest. And just over the last year, they're up 408% all the way up to $249. And this is going to boost their revenue from all of these AI companies need to have the storage. They're going to be in control of the pricing power. So everyone knows this, and we really should have got on this a lot earlier. Other than just buying AI stocks, we could have been buying plays that ties into AI stocks. But Western Digital, at the beginning of the year, at one point they was at $30, guys, and now they're all the way up to $250 over the last year alone. And just recently, over their last stock earnings, they beat and they raised their guidance. So that increased not only the shares, but the confidence that this stock is really going to continue to grow, and that the growth is for reals. Like from their earnings, everyone suspected that, okay, Western Digital, they're going to be selling a lot more hard drives. We suspected it, but when they had their earnings calls, they confirmed it. They are selling hard drives, high capacity hard drives. They are selling them. And I think that if they're up 400%, they could in a year, y'all, they up 400% in a year. Just imagine if they do it again this year, that's another 800% within the last 2 years. So that's insane. I really think that Western Digital is still bullish right now. And a lot of analysts are saying that they're bullish on Western Digital. They got positive reports. They've been upgrading the price point on Western Digital. So this is one of the plays, an AI play that could be game changing in the AI sector. That's going to be really good for Western Digital. Ticker symbol WDC. So that's the first one on the list. The next one on this list is going to be SanDisk. All right, so here we are on SanDisk. The second one on this list, ticker symbol SNDK. Let me show you guys something right there. They're up 1,109% over the last year alone. I don't think y'all understand how crazy, how dumb that is. Just imagine if you had a leap option on this last year. But and SanDisk is kind of like the same when it comes to Western Digital. They make hard drives and things like that. You guys probably own a flash drive, SSD drive. It's the same thing, right? At one point they was at $30 per share, just like Western Digital, but they're all the way up to $592 per share. I don't think y'all understand, man. They're up 1,000% over the last year alone. Now I could see them having a 10-to-1 stock split, bringing their shares back down to around $50-$60 per share if they have a 10-to-1 stock split within the next year. Because if they continue to move at this rate like this, they're going to be $1,000 companies soon, and they might have a 20-to-1 stock split, something like how Netflix did. So SanDisk, I applaud them. They've been doing great. If you guys don't know what SanDisk is, they've been exploding because of their flash drives in D drives, right? So SanDisk, hey, they've been getting massive orders from AI data centers and cloud providers that need their flash storage. And they're another company that had huge profits on their revenue. When they had the earnings report, they reported huge profits. So every time you think it's overvalued, and then they have an earnings report that show, no, we're really making this amount of money. So then the price just keep going up, and it's all the way up to 1,000% over the last year alone. All right, and then the last one I'm gonna show you guys is ticker symbol MU that we did get in on. This is MU over the last, so this is Micron Technology over the last year alone. They're up 360%, all the way up to $422. At one point, they was at $68. We did get in kind of late on over inside the Patreon, over inside the Discord. But Micron Technology, they made RAM, right? So they made RAM. I think they used to make Corsair RAM, but they made consumer grade RAM, right? Anybody could go to Micro Center, Walmart, it'd go to these places, buy these sticks of RAM, put them inside the computers that they're building. Like you could go buy RAM, and RAM has become so important in the AI industry, inside the AI sector, that Micron Technology, they shut down their factories of making consumer grade, so that you can't go out and buy their RAM anymore. They're only making it, producing it for AI companies and other companies. So they shut down their manufacturing so they could boost manufacturing of the RAM for specifically made for corporations and selling it to them. So now they're in control of the RAM prices. The price has been going up. They're up 360% over the last year alone. This could be another 1,000% gain. Oh, wow. This could be another 1,000% gain within the next year. That would be insane. But because we do got leap options on this, but Micron Technology, RAM is very important when it comes to AI, especially when it comes to language learning models with AI, for it to remember everything that you was talking about.